Students, welcome to my class on cash budget. Cash budget, is one of the important tools in the financial projections. In fact, I've told you that it is an estimate, a document that's basically prepared to help the business managers to know their cash flows. A cash budget is basically prepared in advance, and it shows almost all the estimated cash receipts and any kind of cash payments. Basically, what we do in case of your cash budget is we add the immediate cash receipts to the opening balance and then deduct the immediate cash payments. That will give you the closing cash balance. So based on that, I've taken a question. The question is all about this. You can just have a look at the question that we have over here. The question is, from the following information, prepare the cash budget for the month of Jan to April. The expected sales is given to you, which is from Jan to April, 60,000, 40,000, 45,000 and 40,000. Same way, we are also provided with information on the purchases, which is 48, 80, 81 and 90. All your expected sales come under the category of receipts. So therefore, it will be recorded under the immediate cash receipts. Same way, your expected purchases are considered to be your expenses, that is incurred during the month or on a monthly basis. So we have to record this under the category immediate cash payments. Besides this, they have also provided you that wages to be paid to the workers is 5,000 rupees per month. Balance at the end, balance at the beginning of the month is around, let me scroll this, balance at the bank on 1st January is 8,000, and it has been decided by the management that these are the conditions. Now, why do we have this conditions here? Because it's basically to tell the management that in case of such scenario that exists, we should be prepared. And what is the arrangement that we should be making? If there is surplus, then there is no issue. When there is a deficit, there is shortage of fund, which means we have to be prepared. Preparation could be either to ensure that you try and look at the maximum support from within, if not from outside. So usually when you are actually depending on money from that you have to take from outside, you have to definitely keep your management informed about it. So therefore, what we have here is the first condition: in case of deficit fund within the time limit, within the limit of 10,000, arrangements can be made with the bank. That is, if there is a shortage of money to the extent of 10,000, within 10,000, we can make arrangement with the bank. In case the deficit exceeds 10,000 and it is within 42,000, you have to make arrangement by the issue of debentures, and that is what is preferred. By chance, if your shortage exceeds 42,000, then you have to go for the issue of preference shares, and that has to be again considered keeping in mind the limit of the authorized capital. Let's go to the solution. Now, this is the solution I've already worked out and kept for you. What we do is we usually write the name of the organization. If the name of the organization is not provided to us, just start with the solution and write cash budget for the period Jan to April 2022 or 23, whichever year is provided to us. If the year is not given to us, just leave it as it is. There are 5 columns here: particulars or details, Jan, Feb, March and April. Now, what is given to us is the opening balance. I have very clearly told you, all that you have to remember is just add up the opening balance. Just take this 1 minute here, type it out for you. Opening balance plus your immediate cash receipts minus your immediate cash payment. This would give us the closing balance, right? Okay, so keeping this formula in mind, we are just going to add up. Opening balance that's given to us is 8,000 rupees. What is the sales and how do you take the sales? So this is what is existing. So these are the columns that will not be there. It will come to you only after you compile the information as provided to us for the month of January. So opening balance is around 8,000 rupees. We add to that the immediate cash receipts. The immediate cash receipts there, probably what I can do is add one row here. Just ignore this. 1 minute. Okay, no problem. So this is your immediate cash receipts. Immediate cash receipts, right? So these are your immediate cash receipts. I've just taken it as it is. This is the data that has been picked up from here: 60,000, 40,000, 45,000 and 40,000. Now just take in your books only this information. These two are not there. These two are absolutely not there. We go by what is a scenario that is existing and accordingly make the decision. Should we actually go for the issue of debentures or shares? As of now, the total that you have is only 68,000. That is what has been recorded here. Okay. So besides that, we have the immediate cash payments. In the beginning itself, you can understand that there are two things that you have to have here: immediate cash receipts and payments. So accordingly, you can make a note of it and record it as well. Payments. Now, when you categorically look at the payments here, there are only two major payments that's given to us in the question. One is the purchases, the other one is the wages. Purchases information is 48, 80, 81 and 90 they've taken. And wages have to be paid to the workers, which is 5,000 rupees per month, which is also recorded. So whatever is given to us in the question has been recorded. So this information is there. What we do is I add up these two. 8 plus 60,000 is 68,000 minus 48,000 and 5,000. So 48 plus 5 is 53. 68,000 minus 53,000 is 15,000. So this is the closing balance. Now 68,000 is definitely more than your 53,000, which means the answer is in positive. Positive means there is surplus. When you have surplus, we have no issue. So in the month of Jan, we have surplus. So we don't have to go back to check as to what should be the condition that needs to be applied here. So since it is surplus, we can just ignore, and which also means that we are balanced, and besides paying all the expenses, we have in that particular month a surplus of rupees 15,000. The closing balance of this month becomes the opening balance for the next month. 15 is getting added up to these two. 15,000 is added up to 40. So which means we have 55,000, right? So we have only 55,000. Now, the expenses during this month, if you look at this, it is 55 and 85 is the total expenses. Now 55,000 minus 85,000 is actually close to around how much? 85 minus 55 is 30,000 rupees. Now the management in the beginning itself has decided that in case there is a deficit fund which exceeds 10,000 but within the range of 42,000, we can issue the debentures. And now since the difference is 30,000 only, we can go ahead to issue the debentures. And that is what has been recorded here as 30,000. Now I just add up them. It is 85. 85 minus 85 is 0, which means we have both the receipts and payments equal. We are neither having a surplus nor deficit. So whatever we have in the beginning, the amount that is left with us, or maybe we can also say that whatever I receive is equally spent on my expenses, and therefore there is no shortage at all with me. So so this particular month, February, has absolutely no balance. So which means when I'm taking this balance to the next March, to the next month March, I have nil. So the balance is nil. 0 added up to your sales is 45,000. Again, back to the work we were asking you. Like the way we did in February, you can continue to do the same thing here. So we have 45,000, 45,000, okay. So 45,000 minus, now that is all. You don't have to look at this, okay. Just forget this portion. Okay, 45,000 rupees is what you have here. Now, your total expenses during the month of March is 86,000. 86,000. So 86 minus 45,000 is 41,000. the difference is 41,000, right? Which means there is a shortage. Shortage means deficit. Deficit again means that you have to see what is the total amount, and it's very clearly said in the condition 2 that in case the deficit fund exceeds 10,000 and within the range of 42, you have to again issue debentures, and that is what is the total amount we write, and we have applied for debentures. We have issued debentures 41,000. So you're raising a small portion of loan by the issue of debentures. After we added up these two, so we got this 41,000. Now this is 86, and 86,000 minus 86. Again, you have absolutely no cash in hand. You have neither surplus nor deficit. And there is no money left in the month of March to be carried to April. In the beginning of April, then we have the opening balance, which is 0. We found that the amount what we have in the month of April is 40,000 only, right? And here the total expenses are close to around 95,000. 95,000. Now what is the difference? 40 minus 95? There is a difference of 55,000. The difference is 55,000. It is going beyond 42,000. Go to the condition 3. The condition 3 very clearly says that in case the deficit fund exceeds 42,000, then you have to issue the preference shares. So you are issuing the preference shares. Shares are issued here, and in the month of April we have 55,000. 40 plus 55 is 95,000. 95 minus 95, again there is 0. Okay, so this is how we have your cash budget prepared for the month Jan to April. This was the most simplest of all the questions. Hope you understood this question. Thank you for watching.